I'm Dion. I head investor relations for Cityfunds. Been here for about a year. My background's investment banking, so I came from the technology and media investment banking team at Citigroup over in San Francisco. And now I'm over in Dallas, heading IR for this great fund with a unique strategy. We do equity purchases of single-family residential real estate around some of the most in-demand markets in the US, which is super, super cool because I didn't know that you could buy a portion of an owner-occupied single-family residence and partner with them. So very exciting stuff going on there with our fund. And again, just happy to build out more solutions with our team to get investors to be able to have accessibility into our fund and be able to grow their wealth through us. So that's a little bit about myself. I'll go ahead and pass it to you.
Okay.
Remind me, it's Maddie, right?
I'm Chris. Maddie
Okay.
does all of our marketing and podcasts and webinars. And so Maddie's a little bit behind the scenes.
Okay, okay. It
Yeah.
just says preferred trust there, so I
Yeah.
don't know if you can edit that, but no worries.
So I'm Chris Tremblay. I'm the Director of Operations for Preferred Trust. And we are so glad to have the opportunity to have this webinar today with Cityfunds. And Dion, we appreciate your time today. So I'm here to talk a little bit about self-directed IRAs and how they can be used to invest in alternative investments such as Cityfunds. So we'll jump right into it here. Oh, there we go. All right. So the first thing, obviously, we need to know is what is a self-directed IRA? People hear that, they're not quite sure, or they have an account maybe at TD Ameritrade or Edward Jones, and it's quote unquote self-directed because they can go online and move their stocks around and that type of thing. But truly self-directed, one of the most important things is the type of investment that account is holding, which is alternatives. Anything that is not publicly traded, anything that's not in the stock market. Once you have that, you are in control. So the account owner. So typically with your standard types of retirement accounts, you're going to have a financial advisor involved with it. They're going to be helping you decide on what to invest in based on your risk profile on all different types of things, but they're really there to hold your hand and assist you. In a self-directed capacity, you as the owner of the account are really selecting all of the investments and you have control over what your choice of investments are. So that's really the difference. That's what a self-directed account is. So the TD Ameritrades of the world, they typically cannot hold alternative investments. So from a standpoint of how we're regulated the same. It's really the difference is the types of investments that can be held. Oops. Cool. There we go. So some of the benefits of having a self-directed IRA. Diversification is huge. That's one of the things that we always teach our clients. You know, we cannot give investment advice. We're not registered to give investment advice. We're not licensed to do that, but diversification is important and we can educate about that. So we always like to say, you know, don't put all of your eggs in one basket. It's important to kind of go across all asset classes. That way you truly have the best possible outcome for your retirement. Tax advantages, pre and post tax. So you have traditional and Roth accounts, depending on where you're currently at with your current retirement account and what you choose to set up in the future. There are huge tax advantages. There is inherent asset protection, which we like. And then it's a way for you really to build wealth for your beneficiaries. It's a way to increase the ROI of your above and beyond what typical investments have. So let's take a look. There we go, of the different types of accounts. So just like you're thinking about, you know, your typical retirement account, when you're thinking about your account with an Edward Jones or a TD Ameritrade, they're all the same. There's no such thing as a precious metals IRA or a real estate IRA or a digital currency IRA. The only types of IRA is what the government with the IRS sets out, which is traditional, Roth, simple, and SEP plans. These are the 4 different kinds of IRAs. It's just what you can hold in them that's different. When you have a self-directed IRA, you can have a self-directed traditional, Roth, simple, or SEP, which holds those alternative investments. When you're looking at traditional IRA, you're looking at a pre-tax account. Roth is an after-tax account. So any of the income that you're making, when you finally take distributions of it, are tax-free. So that's really attractive about that Roth account. And then there are simple and SEP IRAs. And these are more for your employer based accounts. If they're not looking for a highly administrative account, such as a 401k, the simple and the SEP might be something that small employers would look at. So those are the 4 different types of retirement accounts that the IRS allows for. That Roth is probably the most attractive because of that tax-free income. But there are limitations. You can contribute to your IRA every year. There are limits set by the IRS, but they're also based on your modified adjusted gross income every year. For an individual, it's $161,000, and for a married couple, it's $240,000. So you just have to make sure that you work with a CPA or a tax specialist to know what your contribution limits are, if you can contribute, if you're going to go into a Roth account. So one of the things we like to focus on when we have clients come to us and they kind of ask us, well, I don't know how, it's very typical, those big names in the industry, the Edward Jones, Wells Fargo, those type of custodians. So that recognition or that brand recognition is easy. So when you're thinking of a self-directed IRA, and a custodian that's associated, what should you be looking at first? So some of the things we like to tell clients or those that are interested is really look at the reputation of the custodian. It's important to look at the state that they are regulated in. For preferred trust, we're regulated in the state of Nevada by the Financial Institutions Division. We are considered a financial institution. Our scope of work is just a little bit different. It's strictly IRAs, but we do get examined every year. We do face audits every year. So the reputation of the custodian is important. You also want to look at the reviews that the clients are leaving. And if there's any complaints, and you can actually go to the state regulators and find out more about the custodian that you're considering using. Many states don't have that high of regulations, so it's important you look at that. Investment options is also important. Not every self-directed custodian offers the same investments. It's not because they're not allowable by the IRS, but it could be because of risk to the custodian. For example, some custodians won't allow investments with digital assets like altcoins or Bitcoin, Ethereum, that type of thing. Some do. Some don't allow investments in foreign investments and properties in other countries. So you kind of have to do your research, know what you're interested in, and reach out and ask the question. The security measures around the company, around the assets, to make sure they are secured. And what educational resources does the custodian provide? For us, like I mentioned earlier, we can't give investment advice, but we pride ourselves on a high level of education to our clients. That's what they are seeking from us. They need to know the do's and the don'ts of the IRS. They need to know what they can and can't invest in. So those are just some of the things that you can decide when you're looking at working with a partner custodian. So a little bit about us, founded in 2007. As I mentioned earlier, we are licensed, regulated, and audited. The IRS is our federal governing body, and then the state of Nevada is our state level. We are a custodian and administrator. That means we don't outsource any of our work to any other companies. And that's super important to recognize. There are a lot of just administrators out there. They're just basically paper pushers, but they have no license to do that. So we do both. We do everything in-house. We don't, source out any of our services. And we have custodied over $3.4 billion in alternative assets. So how we work, we don't have anything to sell. We don't have a product to sell. We don't have an investment to sell. We are selling our service. So for us, empowering and educating our clients, providing them guidance and support throughout the investment process. A lot of people, this is the first time they've ever done this. They don't know how to go through the processes, how the transactions work. So we make sure to give them a high level of support, holding their hand through the whole process so they understand how it goes, and what are some of the downfalls of having a self-directed IRA too. Sometimes clients, they get creative in what they want to do, and we want to make sure that they're not doing anything to disqualify their retirement account. And then fast and efficient processing. We like to process investments within 24 to 48 hours. We know that time is money, and that clients are losing money for any day that they're not invested. They came to us to make an investment, and we feel that's necessary to get them to that point and get it there quickly. So we always say we have the highest level of transparency. None of our fees are hidden. It's all on our website. We do have fees for administering and custodying your IRA. We don't make any money off of the investment themselves. We're not licensed to do that. So our fees are based on the transactions that we process. So based on your account value, cash and assets, as you can see in front of you on the screen there, we tier up by how much our IRA admin fee is every year. And you get a vast amount for that. We're also taking care of all the reporting to the IRS, 1099s, 5498s, your annual statements, an online portal where you can see your account 24 hours a day, 7 days a week. So that's a little bit about our fees. And this is everything that we do. Like I just mentioned, what we do for our fees. Little bit of outline there. Phone and email support, of course, continuing education such as webinars, podcasts, and white papers, and your annual statement packages as well. So alternative investment options. It's easier to tell you what you can invest in than what you can't, because there are very few things that the IRS says that a self-directed IRA can't invest in. But the things that we see most common that our clients are investing in: real estate, and this includes REITs, it includes tax deeds, real property, investment properties such as fix and flip, rental properties. You can buy into funds. Precious metals investments, gold, silver, platinum, and palladium are very popular today. Digital currency, so Preferred Trust Company is one of the very first that started allowing clients to invest in altcoins. Natural resources such as oil and gas, mineral rights, that type of thing. Private placements and startup companies. So, the list is long. If you can think it, we can invest it for you. And then one of the things that we always say to the clients, when they're asking about what they can invest in, we always, like to remind clients that doing their due diligence is super important. This is their IRA. They're making the investment decisions. So taking time to research the investment sponsor and the investment itself, looking at the sponsor's track record, their experience, what their investment strategy is, and their market knowledge. Obviously, every investment has risk. Nothing is without it, but look at that a little bit. And an exit strategy. Life takes turns when we least expect it, and you probably want to know what it would take if you needed to get out of the investment. So these are all things that we look at when we're working with investment sponsors and we're partnering with them. So just something to think about from the individual level as well. So getting started, it's super easy. We like to say that we've come light years ahead now, where everything used to be paper. Everything's online and very easy, very simplified for you, electronic. So you open your account first by determining, which type of account do you want to open? And a lot of that is determined by what your current retirement account is. So if you have a traditional account over at TD Ameritrade, you're going to probably have a traditional account at Preferred Trust, unless you want to do some conversions to Roth, but like accounts transfer. So that's the first thing. So that way you can complete the online application. You fund your account by transferring funds from wherever they currently are being held over to Preferred Trust. I know a question that our dedicated reps always get is, do I have to transfer my entire balance of my current retirement account? And the answer is no. You can do a portion of it. You can always transfer more later if you find success with the investment that you're selecting, or if you find another investment. So it doesn't have to be 100%, a portion. And that's really important to remember. And it's also not a taxable event. That's the other thing. They think, oh, well, it's going from an IRA to a self-directed IRA. I don't want to face tax consequences. It's going from one qualified retirement account to another. So there is no taxation. As long as you as the individual account holder don't come into contact with those funds, and they're not sent to you, and they're sent to preferred trust directly, there's not a taxable event. And then you select the investment, right? If you're interested in Cityfunds, then you would let us know once the account is open and funded that that's what you're going to be making an investment with. And then once the investment is funded, you're receiving income from that investment, and it goes right back into the IRA. So again, not a taxable event, comes into the IRA. You can use those funds to reinvest, make different investments. There's a lot of options out there. So if you check out the screen right now and you scan that QR code, you can schedule a consultation with one of our representatives, and they will help you. They will walk you through the application process. Maybe you're not ready to open the account yet and you have your own questions specifically for your situation. Our reps are fantastic. They are happy to go through everything with you step by step, so you can easily get started. And that's about preferred trust today, Dion. That's everything you need to know.
Amazing.
Yeah.
I want to take a second and thank you so much. That was such a great presentation. I want this deck for myself, so I'll have to reach out and see if you can send
Sure.
it to me. I feel like we could leverage some of this material just with our own thoughts and emails that we put out.
Absolutely.
Does it make sense to try to answer some questions? I see I'm looking at the
Yeah, I
chat
see
here.
one. Yeah, we can do some. It says, currently have a SEP IRA. Can it be transferred to a Roth? And are there any taxes to be doing a transfer? Yes. So you can transfer a SEP to a Roth. We would open the SEP account first and then convert it to the Roth. It is considered a taxable event, so you will pay taxes, but it's up to you when you want to pay them. You can pay them at the time of conversion, so we can handle that for you, or you can do it at the end of the year when you pay your taxes. We have a form that you fill out so that you can tell us exactly how you want to handle that. And we always, when you're converting anything, any type of retirement account to a Roth, we always suggest that you speak with your CPA or a tax professional, really to understand your tax liability at the end of the year, and if it's a good decision, for you from a tax standpoint. Let's see, anything else out there, or is that that's the only
Let's
question right now?
see. Yeah,
Yeah.
I believe that's the only one right now, but I
Okay.
have a couple of
Sure.
questions. So a lot of the time I have investors, they reach out and, I know preferred trust allows you to invest in private placements, but
Mm-hmm.
some investors who are not accredited cannot invest in Regulation D 506C private placements. Does preferred trust allow for non-accredited investors to invest in, say, one of our accredited offerings through a preferred trust account because it's now an institution that has more than $5 million that can invest, or is that not how it works?
Right. So you would have to have another offering that would be for non-accredited investors. So the IRA can invest in, accredited investment or non, but
Mhm.
the investment sponsor has to be offering both.
Mhm.
That's how that kind of works. So we
Okay.
do have investment sponsors that have both. So it just depends on the offering, basically.
Okay. That makes sense. Yeah, that's a
Yeah.
good one there. I get that quite a bit. And then in terms of, I think you went over fees for preferred trust, correct?
Yes.
Yeah, can you remind us what those fees are?
Sure. So we have a one-time account establishment fee of $50, and then your annual administration fee is based on the value of your account, all in, so cash and investments. So for instance, our typical account holders have anywhere between 50,000 and 100,000, and that's a $400 a year admin fee. And then it tiers up from there, but the highest they'll ever pay is $1,000 for an account that's valued at 600,000 or more. So you
Mhm.
could have an account valued at $1 million, and you're always going to pay that $1,000 fee, which we've seen a lot of our clients make themselves millionaires over the years. So it
Yeah,
helps when the fee sustains.
yeah, yeah,
Yeah,
yeah. Absolutely. All right. Well, that's super helpful. I really appreciate that. I
sure.
believe, while we're on here, it may be good to, let's see, go over some city fund stuff. I think
Yeah,
I gave you
let's do it.
host permission. So I'm going to see if I could take that back so I can share my screen here. Let's see, can I reclaim post? Here we go. Good, and then I can share screen here. Then let's do slideshow. All right, can you see this?
I can.
Your screen there. Well, great. So yeah, again, thank you everyone for joining. I hope everyone on this call is excited about real estate, either a advanced real estate investor or someone who's getting introduced to real estate and wants like a good fund, a way to kind of get your foot in the door with it. The beauty about Cityfunds, we're here to help people with their real estate goals, which are typically to grow wealth through real estate. That's the whole point of our fund. We help real estate investors grow long-term wealth in a unique strategy that a lot of people haven't seen before. So everywhere you go, you see typical funds. They go out and buy rental properties and they get a bunch of cash flow together and our cash together, invest in the property, and they pay some dividends either quarterly or monthly based off of the rental, which is great. Investors need more. Typical investors like income and growth appreciation. For those of you who don't know, kind of the tried and true way to grow wealth in real estate is through appreciation. You bought a home in Los Angeles for $150,000 20 years ago, and now it's worth $2 million or 1.5 million or whatever it is. Cash flow is great, but long term, you need ownership, you need stake in the actual property, and you need to hold it to get that appreciation. And that's our fund's focus. So though we have income funds like the yield that just launched that pays about an 8% APY, our original strategy is growth. And we do growth through fractional equity purchases of owner-occupied homes. So we go out and we actually work with homeowners to acquire, say, 10% of their equity in their home for a typical average check size of around $50,000 to $100,000. That way, for every dollar that homeowner makes in their property, we make about 10 cents for that and that percentage. And we do this again, like I said earlier, in the most in-demand areas, which we can go over those markets. Austin, Dallas, Tampa, Miami, Phoenix, Las Vegas, Nashville is getting ready to launch. So areas that are very in demand. A lot of people want these prominent metros to get a piece of that. And that's what we're unlocking through this fund here. And I'll give you a little bit of background on how exactly we do partner with homeowners here. So Cityfunds unlocks this $30 trillion home equity market for real estate investors by offering what's called a home equity sharing agreement. We call them home equity investments. But it's essentially a agreement that allows us to acquire an equity stake of an owner-occupied home. Why would they agree to that? Why would the homeowner agree to that? It's because they simply want liquidity out of their home in a market like today, where interest rates might be very high. I don't know what they are at this very second. I think some of them are touching like 7.5, even 8. Homeowners don't want to refinance. You bought your home for say a 3% rate, and you got it for a great price, and now you're growing all this equity over the last 3-4 years. Your home's almost doubled in price, but you can't touch it because typically the most historic way to get equity out of your home is to sell the home or to do a cash out refinance or a HELOC. Strategies that increase your debt, increase your cost of living by having you pay an additional monthly payment. Nada Holdings, we offer a financing solution, the home equity investment, where we give them that cash. It's essentially an interest-free loan because instead we take an equity stake in their home. So they're not paying us any monthly payments or anything like that. It's not a debt vehicle. We're simply having ownership, and we get paid out from their appreciation of their home. So very, very cool, unique, different way of doing stuff. It's great because the average homeowner in America today has around 300,000 in home equity. So it's just unlocking another way to invest in all these homes that traditionally you might think, I have no way of investing in these great homes because homeowners already own them. I can only invest in homes that are either being sold or are vacant. That's not true with our fund. We allow you to invest in homes that are already occupied, which is phenomenal. I already went over the slide kind of about like what the home equity investment is. So, but here's more of a formal kind of rundown. It's essentially an alternative financing option for homeowners. Homeowners want cash out of their equity without increasing their debt. We have that solution for them. Home equity sharing agreement. Hey, we're going to invest in your home with you. Here's the liquidity now. Here's $100,000 cash. All we want in exchange is we don't want monthly payments, interest payments. We just want a percentage of your future appreciation. If you win, we win. If you lose, we lose. It's a true partnership, similar to like a VC investing into a company, right? Um, Cityfunds were really the only fund that allow investors to invest alongside homeowners. So on the origination side, there's probably three or four players that do home equity sharing agreements. You guys may have heard of Home Tap or Unlock or some of those funds. We're the only fund that originates this and has the asset management arm with it. So Cityfunds. So we allow retail investors to come in and profit share with us in this investment. I'm sure I think HEI's ranked at I think second or third in the top real estate asset last year by the National Association for Real Estate. So I imagine more HEI funds will pop up, not as the first. And there's a big advantage of being first in terms of our share price and getting in and buying these shares early. As other funds start to hop on the trend and all that, it's definitely a benefit of getting in early and kind of experiencing that growth over time. The plan for these funds is to go public at around $25 million. So that, they'll be listed on, say, like a Charles Schwab and a Fidelity and stuff like that. Very exclusive for now, as of course, this is a private placement, so a private real estate fund at the time, currently. I'd say one of the biggest value adds of our fund is just our buying strategy, right? So as a investor, we partner with our homeowners. And what does that mean? What's the benefit of that? Traditionally, if you went on Zillow and bought, say, one property, if it was listed at 500,000, you'd probably maybe get it for 500,000. You might have to get into a bidding war and maybe pay 550. You may get lucky and get it for 490 or something like that. But it's really hit or miss every single home you try to buy. Since we partner with homeowners, in exchange for the value of the homeowner, each home equity investment is placed at a 15% discount to its home's fair market value. So on day one, we have about an 18% in the money gain on all of our assets. And we have over 100 currently on the books. So imagine you went around Zillow right now and said, hey, I want to buy 100 properties and I want to get all of these properties for 15% off their fair market value. You can either do that, which would be pretty challenging, or you can spend 5 minutes signing up for Cityfunds, press a few buttons, and you get that at your fingertips. That's what our fund is. So very unique, very cool. That's what attracted me to join this fund, was really the buying strategy and the actual asset itself. Those two things together, I was sold. I wanted to be on board. They are secured too. So it's secured by real estate. Not a holdings and Cityfunds are two separate entities. Your money is going directly in to home equity investments, which is great. So just talking about a couple of our markets here, like I mentioned, we're in Texas, Florida, Phoenix, Denver, California, Nashville. I think the goal long term is to have a city fund in just about every single state. And for most of these individual funds to go public. Each one, it would take each market around 25 million for each of these to start going public. And we're definitely on our way there. The benefit of just getting your feet with Cityfunds is you can choose a specific market instead of if you're a very advanced investor and you say, hey, I know Austin, I know the Austin market, gonna go in Austin. You don't have to get in Nashville or Phoenix. You can choose the exact one. So how you get started is very simple. You just simply, go to cityfunds.com or download the app on your Apple Store, sign up, connect your bank account. Our share prices range between $10 to about $112 right now. The $100 ones are more the accredited offerings. We have somewhat of like an ETF mutual fund of all of our city funds combined. That one's our number one offering. It's called the Select Fund. And it's a $50,000 minimum. And then we have a yield offering as well, which is an income fund, essentially a loan to the city funds to buy more properties. That one pays out a floor of 7% APY for investments under 100,000 and an 8% APY for investments over 100,000. Great options for those who are accredited, who want a little more diversification and aggressive growth with greater liquidity options. They just have 12-month holds. Definitely some good options there. Tying this back to preferred trust, I believe how the process would work is you'd simply book time with a city funds investment professional like myself. And I would get you connected with someone like Chris who could make sure your account at preferred trust gets set up properly. Then I think Chris will kind of pass it back to me to make sure the subscription agreement for, say, like the Select Fund gets completed. And then you'd be able to invest into the fund through your preferred trust account there. And, 1, 2, 3, it pretty much would be a straightforward process, probably all in taking around 5 to 10 days if the communication's back and forth pretty quickly. So not that long, the grand scheme of things, for a pretty serious long-term investment that you'll be very happy with. So hopefully this helps. This is to kind of run down. I think the next screen is just questions. So I'll go ahead and keep it right here since the topic is self-directed IRA, and just open the floor up for any questions if we have some. Let's see.
Can you see any questions there? Maddie, can you see questions if there are any? No.
I see some questions. Just one about the presentations being available for PDF. I certainly will send the City Funds presentation around to investors, and then I will ask Chris if I can get a copy, and maybe I can put that one in part of our email as well, so that you guys can get both at the same time. I think that sounds like
absolutely. Absolutely, we can send it out, not a problem.
Great. Thank you so much, Chris. That was such a good presentation. Is there anything that I said during my presentation or during, how you can see from these steps, that you either want to correct or emphasize when we kind of go back and forth with kind of onboarding a client? I really think it's, I'll kind of touch base with them first, unless they book time with you directly, and then I'll kind of pass them over to make sure they're able to get their account open by preferred trust. Does that sound like kind of like a reasonable next step if they do want to invest in, say, one of our funds?
Yeah, absolutely. If you refer them over to us, we'll give them a call and go through everything. And the investment process is really very straightforward, just like you have it written up on the screen. We try and make it very streamlined for the client. So once the account is open and funded with preferred trust, we are preparing all the documents, the subscription agreement, in the name of the IRA. I think that's one thing that we do want to point out, is that as an individual investor, if you're doing a cash investment, it's just your personal name. But when you are doing an investment with a self-directed IRA, it's actually in the name of this custodian for the benefit of your IRA. So, for instance, if I had an IRA and I was investing in Cityfunds, the investor would be Preferred Trust Company, FBO, for the benefit of Chris Tremblay IRA. So we make sure all the documents have the correct vesting on them, and then it's under our EIN number and not their social security number. But that's everything that we handle, and then we just send those docs out for signature and get those back, and then we're able to fund. So yeah, pretty straightforward.
Great.
Yeah.
I really appreciate it, Chris. Thank you so much for everyone who's on call. Cityfunds, like I said, we are a real estate investment company, unlocking this access to this $30 trillion market for home equity. It's a great time to get into the market right now, where there's a lot of uncertainty. Once interest rates go down, prices most likely will start to go up. That's just how natural economics work. Interest rates will go down, a lot more buyers will come into the market, which will therefore increase prices. So even though prices are inflated in a lot of places right now, due to supply and demand, it's how the market goes, and prices still have a lot more runway to go up. So for those of you who are excited about real estate, think this is a good time to get in, feel comfortable enough about the fund and know about it. I will be doing a 5% share bonus for those who reach out and send me a note and say, hey, before the end of tonight, exclusively for those of you on this call. So how that will work is if you invested in, say, Select, which is $50,000 minimum, we will add on top of that $2,500 of our own cash to make your total investment $52,500 as a reward and thank you for joining this call here. So go ahead and reach out, send me an email. It's Dion, DEYON at Cityfunds, at nada.co works as well. And just say, hey, I'm interested. I'd like to invest. And we'll go ahead and get you slated down for that 5% share bonus. All right. And yeah, Chris's number is down there. If you guys see it in email as well, I'll copy this and be able to send this stuff out as well for you guys. Otherwise, Chris, if that's all, I think we can go ahead and break here.
Okay.
And thank you so much for giving us
Yeah.
the run.